Ladies and gentlemen, welcome back to the 6th edition of the Trading Congress 2024. Well, it's a free virtual summit for everybody to come and actually learn from profitable traders, from big investors who have skin in the game, who are not the self-proclaimed experts like many other scammers basically in a space who self-proclaim themselves, to be experts. There's no real reason for that. They often use fake Photoshop type of, account statement and so on, and trying to bribe people into actual rug pulls and scams. It's an industry that is filthy, full of minefields and just their dirty schemes, right? Which is why it's very important to find the reliability. It's very important to find the reliable people, the reliable guidance, people who actually, like I said, have profitably guided not only themselves but also people around them, their communities, who created incredible projects. And one of them is actually our today's guest, who's going to join right in a second. However, before we do so, this is a kind reminder that actually today, just at this very moment, we're celebrating Black Friday, just like every other person in the world right now as we speak. The Black Friday is a special feast for each and every single commercial company, business entity, because it means that there's going to be whole lines of people basically waiting to buy new clothes, waiting to buy new devices, new stuff, for the home appliances, domestic stuff. And this typically converts and conveys green in the market, right? Because companies get profit boost, boost earnings, and at the same time, it means the valuation goes up, and at the same time means that investors price them higher, right? So as a result, we see green markets, and we are no different. We are actually following this trend. So for everybody who's right there, been following us ever since 2017 knows that we are actually accredited to what we were doing with a CMT charter and market technician association backs up, basically what with the credential, for what we do and what we say is credible, is profitable right there. And for everybody who wants to stop missing out on all those pumps and crazy meme coins, all those airdrops, incredible pumping, tens of thousands of dollars basically into people's pockets, and if you want to catch early gems, well, this is your chance to actually do it 50% off. And it's going to be time limited. It ends and expires as soon as you can expect, because the Black Friday sales is limited. However, without further ado, there is so much to be discussed about the market that is getting closer and closer inevitably to $100,000. And I cannot think of many better people to talk about this than Kamil Gancarz, who's my true friend, who's my good brother in Christ, man of God, himself, very good moral backbone, and an even better professional in a space of macro type of analysis. So there's a lot of macro that's going to be basically subject of today's discussion. Kamil, welcome to the show. How's it going? How are you feeling today?
Hi, Adrian. Great to be here, and really amazing to see you. However, online, across a few countries, I suppose. I don't know where are you now.
Soon, man. I don't know where I'm even either, right? I'm actually right now I happen
so
to
it's
be
crypto info, right? It's totally encrypted.
I'm somewhere L1, man. I'm somewhere L1. So layer ones is what it is. Although I'm really happy that you found time, of course, with all the busy stuff
Thank
that you
you.
have on your plate with Bitfold, right? That you actually are founder and
True.
inventor. So why don't we kick off with a little bit of an introduction about you and what Bitfold is?
Okay. So, first of all, why I'm in crypto space? Because Bitfold is a crypto startup. I mean, nowadays it's cybersecurity startup. It's not only crypto related, but why I'm in crypto. So I started very early with trading. Actually, I was futures trader for London-based financial prop trading company. I was having I have been having a license for trading on CME, on live London International Financial Futures Exchange. I was trading steers, short-term interest rates products, futures and calendar spreads. So quite complicated even as a product. I have been trading for since 2007, so very early on. And then I left the company because I'm the people person. I want to be with people, and having the same faces every day in the office, open space, big trading floor is quite mad. Plus, I'm more like long-term investor nowadays. So having turnover of over 2 billion euros per year is crazy. Making so much trades. So just for per single individual trader for the company. So I left the company, and then I started my financial consulting business. Then since 2014, because of actually affecting banks with common reporting standard, where the standard were being introduced at that time, I've decided that we need to find a solution because since beginning from 2017, there would be no proper banking secrecy. And I was looking for the solution not to be reported. And what's the best numbered Swiss numbered account nowadays?
No, tell me.
Bitcoin.
Swiss. Okay, I
Everybody
got you.
has access to Swiss banking
I got you.
like product with numbered account just by private key. Hello, it's Bitcoin. And actually there are other cryptocurrencies. So the field was already, I was fully invested since 2014 with my clients. Can you imagine? Really, there was I cannot disclose actually how it was handled, but you can imagine how it can be handled in 2014 to invest in the product that's nobody even almost believes in that, and I was handling that for the clients, so they made loads of money. What else? I've made loads of money, but also I found that if you want to invest in altcoins and make some trades between the different products, it's crazy with those hard wallets. I mean, it's really bad experience. So I decided we need to find something better. We need to have something that is like an iPhone, but at the end of the day, if something is connected to the internet, it can be hackable. So, so you need to have two separate computers and monkey that would be switching pen drives between them. And that monkey is my invention. And no animal were harmed during the R&D process, which is great. So fully compliant company. Yeah, so since 2017, I'm running Bitfold, the startup, and also alongside I do lots of macro analysis. I have my gancarzresearch.com, another company where I teach and show how I have approached. Unfortunately, only in Polish nowadays.
Got you. With the AI kind of like a theme, it's going to be so much easier to actually reach out to many different countries with that. Although the question that I think many people may ask, right? Because yesterday we had a session about Bitfold and how much of an innovative solution that is. Today's focus is on the markets, right? And a lot of people continue to ask themselves, very very honest yet very simple question: how far is the moon?
Yeah, moon is fairly close, but we need boosters. We need additional rockets. and they're not supplied yet by the market. If I may actually use my magical charts.
Do so, please.
So I won't see you for a sec because I will use this screen to share, but let me check if it's working properly. Can you are in the show. Can you see the screen with Bloomberg here?
It's right on.
Okay, perfect. That's amazing. But I cannot. Yeah. So here's a chart of US liquidity. So it's US financial liquidity based on data from Fed. It's Fed balance sheet minus TGA, Treasury General Account, which is in New York Fed. So we subtract funds that are held by the government, because government is actually sucking liquidity with taxes and providing liquidity with spending. And also we subtract reverse repo, which is a way of sucking liquidity out of the market via Fed. So that's why we have net liquidity. And I don't know if everybody sees that, but the white line, which is liquidity, highly correlates with price of Bitcoin. Would you say that, Adrian?
Yeah, at least for the key reversals from what we see, yeah.
Yeah. So if we find the bottom of the liquidity, like here, or let's say here, it's highly correlating with the low after FTX. And please remember, there was FTX crunch, and another 25% we see here on the chart. The market dropped because of that event, right? So it happens, but without that, the bottom of the liquidity was actually around November, right? We see here it's 26th of November. This drop here is only related with closing financial year, because it's 30th of December. So you need to park some funds basically just before New Year. And here we have the transactions straight away. So the funds were unparked, right? Provided back to the markets. So it's highly correlated. And this recent spike in price is actually a little bit different because it's not driven by liquidity, which we can see that it's not here. It's driven by Trump trade, is first of all. Also, all that legal framework that will be introduced. But also, I found something else. There is some very special liquidity available on the markets, and that driven the price. It's liquidity of bonds, of American treasuries. And what we can see here, this is the chart that is showing a kind of tracking error of theoretical prices of bonds based on yield curve and how bonds should be priced, and the mismatch of the market actually pricing them along the whole yield curve. So if the index is high, there is low liquidity on bonds. If it's low, it's high liquidity on bonds. And what we can see, there was a big spike of error, so there was less liquidity on the market, and the Bitcoin was trading actually downwards, a little bit sideways, but downwards. And then happened that liquidity were back on, not on the whole financial market, but on the bonds. And what we see is the similar size of spike with Bitcoin that compared to bonds. And what we see also, there is some withdrawal of liquidity, and straight away we had correction on the market. So for a short period of time, because nothing is happening with general liquidity, with this only trend line here, bonds were taking over what is happening with Bitcoin. So how far is the moon? Moon actually can happen something from 3 to 12 months. We don't know yet for sure. We can see that Bitcoin is trading in actually all financial instruments. If they are trading properly, there's long-term trend, like secular trend that is related with some economic or social change. If we have that proper trend that is lasting over 10 years, then everything is trading around 2 standard deviations from the trend. And trend Here is logarithmic trend. So we remove this exponential growth using a logarithmic chart. And also we use a linear regression to have this trend just calculated. It's not, there are not lines placed by me. It's the software that is placing for me. I'm just putting the start and end line. So we have the standard deviation, regression here on the red, and we have two standard deviation. And this is how Bitcoin is trading. So we see that it was trading properly just after FTX crash along the -1 standard deviation. And it's similar to 2015 and beginning of 2017. So it's a similar story. And also this story may soon happen like that. So it won't be in a bull market driven and similar to 2021 and March and double top like here. It may be actually similar to 2017. And when we get that, that would be huge.
I got you. So here's a catch, right? Because on one hand, of course, macro is, can consist of the leading indicators, the coincident indicators, the lagging indicators, right? Out of the lagging, for instance, if we take the ISM new orders index or the consumer sentiment even, right? Because the sentiment kind of like defines in a leading way what may happen. If the sentiment is terrible, we can anticipate that, that it's going to actually lead the bad sales. And if it's going to lead bad sales, it means that the economy is going to, just stall a little bit more than not. S&P 500 can be used, of course, as the index on its own, as an leading indicator. On the coincidence side, we have the total norm for payrolls, kind of like to know, okay, how the economy is doing at that end on that particular moment, right? Or the industrial production, how it's going. But at the same time, like we have all the lagging indicators such as the CPI, the consumer price index, or on the installment credit, or the commercial loans, for instance, right, or the labor cost, and or the duration of the unemployment and all that, right? So what we know is that some of the indicators from the macro side are leading, the others are coincident, and others are lagging. So if we use all the either coincident or lagging, this basically gives us no edge in trading and trying to time the markets and capture them, right?
Sure.
That only comes from trying to use those leading indicators. So how can we anticipate, let's say, the big twist and the what we can forecast, just like we refer, right? Trying to guess the future a little bit, to know what's ahead, as in have the benchmark, have the expectations, have some anticipation. Okay, it's going in that direction and not another, right? You don't have to be like crazily accurate, right? Because all we care is just left or right, up or down. That's what we're trying to figure out. But what kind of like particular macro tools you use personally for investment side?
So I will show you another charts then. That question calls for charts.
Do it as we go.
So let me prepare. So here we go. I will show the correlation between ISM and Bitcoin. And there is also a correlation between BTC Ethereum cross and ISM. But let's do Bitcoin first. So on monthly basis, basically the cycle is like that. We have market tops around tops of ISM. We have market bottoms around bottoms of ISM, or fairly similar situations. And here there's some discrepancy, but this discrepancy is related with ISM cycles, because ISM is also trading in some cycles, because you want to have a leading indicator. So leading indicator I will show you in different chart. I just wanted to show that ISM is highly correlated. And here we have it here. So starting from financial crisis, there are 4 years cycles, or 3.5 years cycles of liquidity, of business cycle, which is highly driven by liquidity. And it is driven by liquidity because we actually in 2008 had a great financial crisis, which resulted in financial reset. I know there are lots of conspiracy theories around 2030 that there will be some financial reset. But actually, this reset started in 2008, and almost nobody is looking at that situation, because we had interest rates drop to a quarter of the point, 25 basis point, or lower bound was at zero, and that enabled printing unlimited amount of money. And we can see that if we would go to a Fed balance sheet. I can show you another charts later on. So the financial reset created those cycles of refinancing debt in US economy. And this refinancing cycle is consisting of, like we see, 34, 50, 37 months. But it consists of big drop and then going up. Then is drop, going up, drop, going up. Now we are in the drop phase. There was some rebound, another drop, but now what will happen will go up. And if we see the correlation with Bitcoin, that's why Bitcoin is actually leading here, ISM. But we know what would happen with ISM. We'll go for a few next months, a month will go actually upwards. And when we reach levels about 55 or more, then we need to be careful and look for the liquidity. So if the liquidity is changing and it starts to stop rising or stops to falling like here, we'll have similar event like we had in 21.
All right. So what actually drives the price of Bitcoin and other cryptos to you?
Mostly liquidity, like I said. Bitcoin is acting as a sponge. It's sucking liquidity. It's actually the easiest trade on US economy. People are saying, oh, there are different products like bonds. There are obviously stocks. Stocks is a little bit different trade. But Nasdaq is also highly driven by liquidity. Actually, S&P similar. But the biggest alpha you can get actually with Bitcoin. So Bitcoin is not just crazy internet money or some silly digits that people are trading around the globe. It's actually trade on business economy, business liquidity, market liquidity, and dollars being printed or supplied by other financial institutions. So it's easy, really, it's so easy.
And for everybody who might be wondering, right? Because actually, when you try from the economic perspective, there are a couple of definitions of what liquidity is, right? For instance, M2 money aggregate, that's one thing, right? But
Yeah.
how do you define liquidity for everybody to know?
I showed that US index, right? And I said it's a Fed balance sheet, we subtract from that TGA, Treasury General Account, because government by taxes are actually sucking liquidity from the markets, right? But then by spending, like there's a debt ceiling and they need to empty the account, then you can properly adjust and there is liquidity going back to the markets. And also third thing is reverse repo, because reverse repo is the way how Fed can suck liquidity. So they can say, like, for instance, why Bitcoin is trading upwards since 2022. Because Fed was actually doing quantitative tightening, right? So everybody was saying, oh, there would be less liquidity. No, because they pumped their bags at reverse repo and started to remove it. So they're acting like bipolar institution, or so they say one thing, and obviously they are doing that because they need to be kind of coherent, and the people need to trust Fed. But at the end of the day, they have this back channel how to pump money back to the markets, and it's by reverse repo. So first they fill their bags. Like additional tanks of liquid, right? And they are removing just on the side. Can you see me? Can you hear me? Because
there is all
error
good.
Message. Okay,
that's all right.
perfect.
What I'm thinking is, again, for like I understand the process, right? I mean,
Yeah.
with my CMT kind of like a journey, I'm still paving, all the things that are happening behind the scenes in terms of the macro side, right? They are all leading ultimately to the result of the price, and that we the market technicians say that it's actually price is the king, right? That whatever
Mhm.
happens in the process actually is then later going to be discounted by traders inside of a price chart, right? So
Yeah.
for trading, of course, we make money by the price difference, right? That's why we say that whatever is happening kind of like, on the back end, is ultimately going to be discounted at least most of the time, efficiently or not to some extent. That's
Mhm.
debatable, on the markets themselves. So how can you exactly tell when the bull market is over? Is it going to be by ISM? Is it going to be by the liquidity? Is it going to be by some other indicators? Like, what do you use privately?
Okay. So first of all, there are two sides to that. I use on-chain data, but on-chain data wasn't good in 2021. It wasn't enough because market, as I'm saying, haven't been overbought by on-chain analysis. And on-chain analysis is amazing when there is very big and fast spike in price, and people are making too much money. Basically, the on-chain data is saying people are loaded by uh, disproportionate values, right? So they are making too much money. I can show you data, another chart if you want, because I have my glass
Please
node
do.
here.
As many as possible.
Yeah. So I just move a few. There can be very simple indicators, but I have also much more complicated one that I designed. Let me just put this window here, and then I need to share my screen. Okay. Wait a sec. Yeah. Can you see Glassnode?
Yeah. Yeah, we
Yeah,
can.
perfect. Obviously, there are some simple ones like net unrealized profit loss. So usually market may be overbought over 0.75 and this blue color. When you get to this ratio, along other indicators, obviously, I have my also own Gancarz indicator where I consist of multiple different indicators, and then I can find by figure, like if we are close to 100, that market is overbought. But also, this net unrealized profit loss is part of that. So, as you can see, based on on-chain data, March was much higher than actually all-time high price in November 2021, right? So this is one approach. Obviously, we have multiple indicators like that. I will show you also my own, because I have two different Gancarz indicators. That's the second one. The first one is also very nice for having showing the tops. See the big spike around the tops is seen also on-chain data. Obviously, there's the debatable was the this highest value that should trigger the indicator. That's the most complicated part. But for the lower bound, it's very easy actually, or fairly easy. We can even see that this drop around the COVID crash was also very close. So it was just easy money just to pump your bags that time, right? So that's one of the approach, and also how nicely you can also find tops is another indicator written here. They are working alongside. So first of all, you need to have top higher than previous top with this teal line, and this red orange needs to have proper spike and then drop. So maybe that one would be a little bit lagging, but you would still have up to 80, 75% of the all bull run available to you with Bitcoin. And obviously, if Bitcoin is triggering that, you are running away from altcoins and other stuff, right?
Hmm. So just seeing that it doesn't seem like we are actually anywhere close, to the market peak by the
No, we
numbers,
are
right?
quite far away. We are quite far away, but the timing is much more complicated. It may happen very fast. But what I presume, the first quarter of 2025 would be actually big correction. We should trend higher and higher and exceed 100,000 till the end of the year, and then should be correction. And after correction would be another phase of, that's why I said we need boosters, because there is no liquidity there. So some bonds maybe would drive us, but it's not main engine. So it's not enough fuel to go further. And Bitcoin has to go further as per all charts, right? We see that. And even ISM, but we don't have fuel yet. So should be correction.
So how much of the upside is left in your opinion?
Okay, that's another nice question. I have answered to that, but it will be crazy figures. So just
give it straight.
And please, it's not financial advice right here, because people love to hate based on my analysis, because something should be the target, right? So just to have this on your mind. But I will show you crazy figures. So let's go there. So based on that standard deviations, it depends when the market would end. If we even don't reach second, because I'm even discounting that we won't reach second standard deviation, but we will reach first one. See, we are on the trajectory here. So 500,000 is even possible. 500,000, $520,000 per Bitcoin. If it will be less, so we should reach at least this regression channel. I mean, it's not financial advice by all means. It's 150 or 240, depends when. The longer, the better. The longer, the higher, right? So from 150 something, 70 till even 300. That's what we see. Also, based on top price indicator that was actually created originally by Willy Woo, he's the total author and owner of that indicator, but I write it myself. We see that the top price is around 400,000, but not always it reached that goal, right? So that's something limiting from the on-chain perspective.
All right, I can live with that. Anywhere between 100 and 500,000, I can live with that.
Who wouldn't?
I can live with that. Yeah, I mean, I typically try to I live by trying to be ready for the worst while actually appreciating being open for the best, right? As in, my job is to make sure that I have my targets conservative, because if they get exceeded, right? If they get actually just overcome and just the targets are going up still, then I'd say it's better to be prepared for the worst and just be surprised by the good rather than by the bad, right? So my expectation actually just by the numbers. Well, I use an EPL, right? It's kind of like a quick check on the market bloat and how much market capital there is on the profit side. That's one thing, on the unrealized part. However, I use for more of the top kind of like projections, I use the MVRV. That is also an on-chain indicator that's called market value, realized value. So what it does, it basically compares the actual realized value as in summary of all the transactions happening on a blockchain in terms of the finances of that, right? The financial outcome of that. And it puts it against, basically the market capitalization on its own. So how much money there is in the market, as in how much people estimate the market to be, right, versus what it actually is. So the ratio right now, last time I checked, it was anywhere between 2.5, 2.9 and 3. That historically only triggered the peak warnings, not even the peaks, but the peak warnings at 7. So that tells me that there is at least 100% north, basically just to trigger a warning signal, right? Just to trigger a warning that the market may still rally afterwards for a couple of months, right? So 100, that's basically getting us closer into upper 100,000, closer to 200,000, and that is by a simple kind of like simple maths, right? There is no, it's not even what I hope. It's not even what I want. I mean, it's just simple maths, right? So there's at least 100% upside on that front. I fully agree that Bitcoin has this tendency, and crypto has this tendency of going way higher than anybody expects in a bull and way lower than anybody expects in a bear, right? Because there is this kind of like a risk, I should say, coming from the behavioral things, right? As in people go crazy, because of those herding instincts, and those cognitive and behavioral biases and the emotional biases that they feel overconfident on top, which is why they spend more, which is why they lose more, right? And on the far extreme opposite, you have people who are extremely fearful, right? That's where the fear and greed index and all those kind of like, just sentiment barometers, just go to the extreme lows. And at the same time, this shows you the extreme undervaluation and extreme overvaluation. The problem is that this behavioral factor can make the markets continue in that direction for many months afterwards, right? So it may happen that even Bitcoin reaches this actual warning on the NUPL side, right? On the MVRV side, it may still continue to rally, just being pushed by like the second Newtonian law of dynamics, basically. If you put the throttle, if you put the force, it's going to continue to accelerate until you take off the throttle or take off the force, right?
That's why if it's driven like that and driven crazy, it's good to see also Z-score of MVRV. I'm using MVRV in my
I'm talking about the
indicator.
Z-score, correct.
Yeah. Because then you can see there is a spike, but after the spike, there's a huge drop, and it's actually quite fast. So you can definitely recognize the spike and then the drop, and you can know that we have finished the bull run also, but based on on-chain data, especially if this is above 2 standard deviation based on the trend line, right?
Oh yeah. And I actually refer to the Z-scores, right? Z-score is just basically for everybody who's watching, is a statistical term for the number of standard deviations, right, against the mean, against the average value. So there is an average value of that, just dynamic average, moving average of the market cap against the realized cap. And that's actually to standard number of standard deviations against from the mean, right? That's what the MVRV Z-score is.
Basically, we are measuring how mean is the market for the bears in the bull market, and how mean is for the bear for the bulls in a bear market.
Exactly. So see, that's why I'm saying, like, having the targets is easy, right? But in the crypto and extremely volatile environments, especially community driven, it may happen that the targets are exceeded so much easily, it just slices through it and doesn't stop. It doesn't go back, right? It doesn't look back, and just goes on and on and on and on and on and on.
But then it's good to take off your chips from the table if it's really exceeding the certain figures, right?
So are you gonna be using literally like the MVRV then for the taking the chips off? Or?
Part of. I'm not using just the single on-chain data. I'm using their combined in my indicators, and based on that I get signals. And obviously, it may not work if there would be changing in liquidity conditions. That's why macro is second part. So either my exiting strategy is being triggered by on-chain or by macro.
I got you. Okay. Okay. And in the meantime, for everybody who's watching and viewing actually this excellent session with Kamil Gancarz, I highly recommend for you to rush over to his Twitter account at Kamil Gancarz, literally for the name and the surname that you can find straightforward, and hit the follow button, because Kamil deserves so much more recognition for who he is and for what wealth of knowledge he's sharing. So that's incredible. And also because inevitably, we've almost kind of like gone 40 minutes into the session, and I feel that we could just go on for 5 years nonstop, right?
There are multiple charts. My Bloomberg is loaded.
So show me something else that you have as well.
Okay. Yeah. Let me. Maybe let's see this correlation, because Ethereum, everybody's complaining about Ethereum recently, right? Because it underperformed.
That's true.
Let me check my chart with ISM, and you will see why that happened. So it is Ethereum divided by Bitcoin price. And what we see is actually the spikes are also correlating with spikes in ISM. And also the trend is correlating. And we see that then another drop is another leg down. So at the end of the day, soon it should reverse. And we see reversal here. But the data from ISM should be, as I believe, 2nd of December. Let me check that exact date, but I think it's 2nd of December. Yes, 2nd of December, that's Polish time, 4 p.m. Polish time. So if the reading would be uptick, there should be another leg higher, within the Bitcoin, and also more with Ethereum.
All right. So do you think, because for instance Vanek brought the projections the other day for Ethereum in the baseline case to hit $22,000 by 2030 in a more kind of like I should say of the actual expectation, right? Because that was the 2022 case, kind of like a bearish case. The baseline expectation for them is actually $125,000 by 2030. So are you placing Ethereum also as crazy as Bitcoin right now is, or is it going to be better?
I would say it's even sooner. 200,000 is actually maybe next year possible.
On Ethereum?
Yeah, look. 29.
If that's 15x from here. All right.
See,
you have the charts. You have the charts. Show it up.
The same solution, the same chart pattern, the same tool, right? Regression, logarithmic increase, and we are trading properly the same way. So here are different targets. Depends when we hit, right?
Okay. But it's not 200,000, it's 20,000, yeah?
Sorry, 200, sorry, 20, sorry. yeah. I mean, but if we can extend the line till 2030, you said, right?
Exactly, yes.
So let me do it, actually, for you here. Live research.
Let's do it.
Oh, it's so hot. See, it's parabolic.
Oh, shit.
No, wait.
It's coming. It's turning back. It's going left.
It's too far. It's too far. But let me. Maybe we can find it. 100 would be possible. That's 27. See, 100.
Wow.
Yeah.
Listen, I wouldn't mind it at all, either myself, right?
Yeah, but it may trade here, so it may be 69. But still, even if it would do 28, 29, so I think 30 is possible. It's congruent with this chart, to be honest. Yeah.
I like that. I really like that, and I wouldn't mind it at all. And actually, like I said, we're inevitably getting closer and closer towards the end of the session. And what we're gonna do actually is, one or two questions that I have from me to you, and perhaps if there are any questions, from the audience, feel free, guys, to pull it in the comments, and I'm going to take one or two if we manage. Although, before we go, Trump inauguration in January, right?
Yeah.
What's the impact?
Maybe that correction that I was referring, because now everybody is trading hopes and, buy the rumor, sell the market, right? So unfortunately, that might happen, and it also coincides with possible future expectation about the liquidity situation. And so, first of all, there should be correction of the selling the news. Then, when he starts to implement those regulations around crypto, to the moon, right? So I think we have very exciting 2025 in front of us. There will be really billionaires are going to be made. So join the rally, not only political rally.
I'm pretty curious, man. I mean, let's what is it? It's 29th, right? It's actually Black Friday, funnily enough. Let's meet up next year, Black Friday, same time, right?
Yeah.
Are we gonna and review this discussion that we just had? That we're just having right now. I'm pretty positive we're gonna be so much higher. To my likes. for instance, I'm preparing to take a lot of money off the table basically in the second half of the year, right, in 2025.
Yeah.
The off ramp, of course, takes time, and you want to distribute it wisely. And of course, I'll be taking money off for the sake of the real estate, for the precious metals, gold, silver. Then I'm a big fan of on the physical kind of like a side.
Hmm.
Of course, that's going to be the time for spreading into more less volatile and safer kind of like activities. So there's going to be dividend stocks in terms of those value orientation instead of growth orientation. There's going to be the passive income from the hedge funds, for instance, that I'm going to be distributing the capital to, right? And of course, cash, because 2026 lines up to be a bear market, not because I say
Yeah.
so, but because that's the track record ever since, basically, right? In the presidential
And
election
can be even
history.
earlier. Can be even earlier.
So that's my point, right? I don't know if it's gonna be 2025 July, for instance, or June, right? I wouldn't
Hmm.
be surprised if it actually knocks out the peak, in somewhere through May and June, which is so
Yeah.
typically what happens, right? Q3 is a typical slowdown, so the odds are skewed against the traders in Q3. So regardless, peak or not, that's likely going to be a lot of volatility and a lot of chop throughout the summer itself. And even if it does exactly what it did in 2021, right? And 2017, basically of taking a peak anywhere between October, November, December, right, the
Hmm.
Q4. Well, then that still lines up with 2026 being a bear market. And Bitcoin, what we know for the fact, loses 70-80% range of the drawdown, from the peak and the bear markets. That means that, well, to my likes, it's actually not worth staying in the market 2026, especially that we know that cryptos, in terms of outside of Bitcoin, but the altcoins overreact so much more aggressively, right, to the upside and to the downside. So if we are to see and witness those massive drawdowns and people losing all the shitloads of money back again, going from billionaires to zero again, with a big hook, then I would place my kind of like um, expectations for that in 2026, right? And I, for one, know that even though all the NFTs are likely going to be back, all the luxury watches and all the Rolex indices are going to go up again because people are going to just take enough profits. The private jets prices are going to go up. The car prices are going to go up. Well, on one hand, empowering the economy, which is positive in term, right? In turn, on the durable side. Although I'm definitely not staying in 2026 loaded heavily into markets. What would you have any kind of like a final comment on the 2026 expectations?
Yeah, but definitely. If we don't get it earlier on, I mean the bear market, because it may be half of the next year, right? Just the beginning. Definitely, there would be proper huge bear market, and I think it may even be much lower than most people think. So we undervalue the correction or the bear market. And what's more, a funny thing that you said about crypto actually driving luxury watches, jets, and stuff like that. See, liquidity at the end of the day is driving everything because Bitcoin is actually proxy for the new financial system. So I just want to give a praise to Bitcoin that everybody would understand how important asset it is because it's driving the prices of different other assets, and it's basically driven by federal government and Treasury Department in the US. So, which is crazy. So, it's the best trade ever on US economy.
Yeah, pretty curious what's gonna line up, 10 years from now. And final question from the audience is Federal U.S. Reserve in Bitcoin. We know central banks are scaling into reserves. We know countries and states are scaling into reserves.
Yeah.
What about the impact that the U.S. is going to have on that note?
You
Is the
know,
final question.
first of all, it's not planned that it will be Federal U.S. Reserve, so not with the federal bank, but it will be Treasury. So just I want to clarify that. So the Treasury Department, so the country itself will build this reserve, not the central bank, but profits from the central bank, if this bill passes, would be used to buy that Bitcoin, which is crazy. Because it's incredible. Can you imagine that there would be recalculation of the price and the value of gold being stored by Federal Reserve and transferred to buy Bitcoin, which is totally enormously crazy. And at the end of the day, maybe not this bull market, But following, or in 10 years, that actually may happen. The market cap of gold will be starting to be in proper long-term bear market, and Bitcoin will still gold launch, to be honest.
Well, and that's what we have to always be on the right side of the trend and observe the numbers instead of trying to guess the future. We have to rely on the numbers, on raw facts, numbers, figures, evidence, something that cannot be denied and refuted. Ladies and gentlemen, what a good session with Kamil Gancarz it's been for the past 50 minutes and so. And as we wrap today's session, I want to give a proper shout out to our partners, to Dragon's Land, to Bybit, to Cointel as well, and everybody who's contributing, behind the scenes, as well as DYDX, of course, our incredible partners and sponsors. Everybody who's contributing to making this space a little bit bigger, better, more reliable, I think deserves the highest glory. And one of them is definitely our today's guest, Kamil Gancarz. So thank you for your time. Thank you for coming over to the show. And final recommendation, go ahead and follow Kamil on Twitter at Kamil Gancarz. His name and surname, as simple as that. He deserves so much more and glory and so many more followers. Thank you so much for coming over to the show, man.
Thank you, Adrian. Always pleasure, and always feel free to reach out. Right? I'm always for you.
That's it, man of God, my man. I appreciate you. And for everybody who's watched and tuned in, thank you so much. And this is a kind reminder with the QR code that is going to pop up right in front of your screens. This is Black Friday deal for each and every single person who's watching that. You can actually scan the QR code right now. And if you want to stop missing out on all those crazy rallies, in the meme coins and airdrops and all those different money-making opportunities, and actually avoid getting wrecked, because of faulty scammers and just all the pump and dump schemes, you're actually in the right place, because here we're actually accredited to do what we're doing. We know what we're talking about, and the numbers speak for themselves. We've been doing that for many, many years, and we're going to soon celebrate 8th anniversary. We're going to kick off the eighth year of working. So rush over to claim your VIP access, 50% off, time limited. Go ahead, scan your QR code. And I've been your host, Adrian Zdunchik, CMT, Charter Marketing Edition, Crypto Verb. God bless, and I see you on the next session. Bye-bye.
God bless you. Bye.